Welcome to a Now Explain Rough Cut video. This video is part of our manual bookkeeping series. You can find related videos on our YouTube channel or search the internet for a Now Explain Rough Cut. So now, let's get explaining. Sales Credit Note Daybook with detailed analysis. What it is and why we need this daybook. We're talking about manual bookkeeping, no computers, pen and paper bookkeeping. We're going to be using daybooks, the books of original entry, also known as first entry or prime entry daybooks. We are collecting information from the source documents. What is a daybook? A daybook is a list of your transactions, invoices, payments written down in sequence in a book. In days of old, this was done daily. Each day, sales were written into a book, so we get the term daybook. Related daybooks. Sales invoice daybook and the bank receipts daybook. Similar and related terms used. Customers, clients, debtors, accounts receivable, they're interchangeable, you can use any of them. Receipts, money in, lodgements, electronic funds transfers, payments. A daybook that might be imagined by you. What a modern daybook looks like. Big Red Book. Often these modern daybooks are referred to as Big Red Books. Why Big Red Book? Because some of these red books can be very big. Why are they big? Depending on how many columns you need. More columns, bigger book. Maybe this big. This book has 30 analysis columns. The columns will be very narrow. Inside, an empty sales credit note daybook. Example of a sales credit note daybook. Let us see how the sales credit note is recorded in our sales credit note daybook. Here is the sales credit note with the daybook entry side by side. You can see the information taken from the sales credit note. Customer name, the number, credit note number, the total value of the credit note. Here is where our sales credit note details are recorded. The net credit value has been analysed, broken down, into the colour of the blocks sold. The analysis allows us to see how much money we returned for each block colour. Explanation of the sales credit note daybook columns. Date. The date of the sales credit note. Customer. The name of the customer who is returning the items. Credit note number. The index number given to the credit note so that it can be tracked. Yes, all these items should be on a sales credit note. So the next three columns, total, VAT and net, what are they? The total value of this credit note that the customer is getting credit for, including VAT. VAT, the amount of VAT contained in the total value of the sales credit note. Net, the value of the items before any VAT is charged. And yes, you should have this information on your sales credit note. Totaling these columns. Each column that contains values must be totaled. By totaling each column, this allows us to see what the total sales are for the day, week or month. In this example, we are seeing the monthly credit note values. This sales credit note daybook lists the two sales credit notes for the month of January. We can't just have a total column because the total of the VAT column will be used in the calculation of your VAT return. The total of the net column is your sales turnover, how much you sold for the month of January. VAT and net are needed for you and your business. The sales credit note daybook allows us to analyse what we credited. In this case, we analysed blue, red and yellow block credits. The analysis columns. We added more columns to allow us to analyse what was returned. In this example, Blocks returned are analysed by colour to match the sales invoice analysis. Blue blocks, red blocks, yellow blocks. We need to cross-check the recorded values. The analysis column values are all recorded excluding VAT. They are analysis of the net amount of a sales credit note. The total of all the analysis columns must equal the net column. Cross-check formula must be true. Blue blocks plus red blocks plus yellow blocks must equal the net. The total value column is made up of the net value, amount excluding VAT, plus the VAT amount calculated on the sales credit note. Cross-check formula must be true. VAT plus net equals total. If the cross-check formula does not agree in either case, then there is an error in the values recorded, and that error must be found. Analysing multiple VAT rates. It is possible that items you sell may be sold at different VAT rates. If the VAT rates of 20%, 10% and 0% are used, then how do we analyse the VAT? Similar to analysing sales credits, we can also analyse VAT. How? We add more analysis columns. In the example that follows, we added a new product, delivery charges, that has a VAT rate of 10%. We will add a new credit analysis column, delivery charges, to allow us to record when delivery charges have been refunded. We would also add a new net at 10% VAT analysis column. Here are our net at and delivery analysis columns. Keep the net value columns beside each other and place the delivery analysis column to the right hand side in sequence. And that's how you set up a sales credit note daybook, and why the sales credit note daybook is set up as shown using these columns: the date, the customer, the credit note number, the total, the VAT, the net, and the credit note analysis columns. More columns can be added to provide more VAT analysis and credit note analysis. For more information, go to nowexplain.com. Thank you for watching.